What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be covering in this update is a little bit of what happened today with the overall market. Now, we had the Fed meeting. We had a lot of things that Jerome Powell has said, and that's going to be the deciding factor on most likely where the market is going to head over the next month or so. Now, there's some very key things that I want to get across to you guys in terms of how the overall market movement is going to be affecting the overall price action of AMC. And it just happened, and we could end up seeing something like that again, where AMC goes on one of these explosive moves to the upside. We also have to talk about some of AMC and GME's most recent Ortex updates. This situation that the big banks are pricing in a higher risk of their own default right now. So a lot of what's going on in the financial system, remember, a lot of people have been talking about the potential for a recession coming or a 2008-like event. And with the events that have happened recently, you can see the pricing in of these events in a couple of very specific asset classes, which I want to show you guys as well. And the last thing that we need to cover is this catalyst that we have coming up on Monday for AMC. I know everybody is going to start getting very excited about this. There's a couple of key things that I want you guys to look out for. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, you guys have seen the success of the 1348 strategy that a lot of people have been having recently. If you do want access to all of the trading algorithms that trade by themselves, all of the 850 stocks that we alert on, the 40 private live streams every single month, the one-on-one training sessions, make sure you check out that link down below in the description to join up on the Discord. Now, AMC closed the day today at $15.72, up 1.35%. Now, when we take a look at this on a couple of longer time frames here, we're still kind of waiting on this 4-hour to really start to kind of come back in our favor. We need this 1348 crossover, and we need these closing candles above the 200 EMA, which right now are currently sitting at $17.99. But when we take a look at what the Fed said today, we can see the moves announced after a two-day policy meeting Wednesday will raise the central bank's benchmark funds rate to a target range of between 0.75 and 1%. So there was a 50 basis point rate hike. Together, the steps mark the most aggressive Fed tightening of monetary policy at one meeting in decades, aimed at rapidly reducing the economic stimulus that has contributed to the rising price pressures or inflation. The Fed, which usually lifts interest rates in quarter percentage point increments, last raised rates by 0.5 point in 2000. So there has been a long period of time before we have seen something like this. But there was a lot of uncertainty and fear over whether or not there was the potential for this meeting or the meetings following for there to be a 0.75% a 0.75% rate hike or a 75 basis point rate hike. And Jerome Powell essentially said the Fed is not actively considering any policy like that. So here's kind of where it brings us right now. When we look at the longer time frames and we take a look at AMC, right around here, this range right here where we saw this bottom was right around the last Fed meeting. The bottom was on the 14th. The top was on the 29th. I've shown this to you guys a couple of times. And when we take a look at this here, the overall market, let's just pull up the SPY really quickly on this time frame, moves the exact same way. When we look at this on the 4-hour time frame, remember the 14th through the 29th, we can see here, this is right around the 14th at these lows. Then the 29th, it peaks right here. So we could be in for a situation where the market wants to start reversing back to the upside and starts to go on a little bit of a 1-month run. If we start to see that, we start to see GME start to follow with it, AMC could be in a position to go on one of those pretty significant runs again. And again, we have earnings coming up next week. We have GME shareholder meeting on the 1st of June. There are a lot of positive catalysts coming up in our near future. So we also have to talk a little bit about what's going on with the Ortex updates here. We have 100% utilization. Let me just make sure that we refresh this right here. Again, the 100% utilization number is complete nonsense. It's been like this for months here, and we've seen the shares on loan continuously change. The percentage of free float on loan changed, the short interest changed, but utilization has not. So what we're seeing here is 19.2% estimated short interest on AMC right now, 98 28.98 million estimated shares to be sold short, 1.97% average cost to borrow, and 4.33% max. Now, in addition to this, when we talk about GameStop over here, we have 19.92% estimated short interest, 6.61% average cost to borrow, and the cost to borrow max stepped up today to 10.49%. Now, a lot of people have been kind of asking the question, are these rate hikes going to come in and increase these cost to borrows? Now, it's possible that they do, but the way the securities lending market is set up and the way that it works surrounding these cost to borrow rates, it's more based on supply and demand. And these rates are not essentially pegged to some sort of interest rate, a bond, or any other type of basically metric like that. So it's more going to be based on supply and demand of the amount of shares that are out on loan and the amount of shares that are willing to go out on loan at that one given time. Now, in addition to this, there's this situation going on with these pretty large banking institutions right now that I find pretty interesting. Wall Street sees greater risk of default by major banks. This is a Reuters article right here. So the cost to insure the bonds of Goldman Sachs, Morgan Stanley, and Citigroup against default hit 2-year highs on Monday on growing fears the U.S. Federal Reserve's aggressive moves to tame inflation might tip the economy into a recession. Now, we did see the comments from Powell today that he said, it's not really on the table right now. He doesn't really see the signs of a recession coming in the near future. But again, they also said that inflationary was not an issue, transitory, here to stay. So you can't really trust what the Fed is saying at the current time. Credit risks have worsened since the Ukraine crisis as some big U.S. banks took a hit to their mainstay business, with capital market activity coming to a standstill and lending expected to remain lackluster. Now, the Fed is kind of participating in this, in raising rates and making it harder for people in institutions or businesses to get their hands on money. That has prompted bondholders to consider hedging strategies to protect against potential defaults. It then goes on to talk about some of these credit default swaps down here, where the prices of these are hitting these 2-year highs. But again, there is a decent amount of risk for some of these assets right now, and it shows us that some of these banks could be in for some significant issues if the economy starts to come to the downside. Now, AMC's earnings is going to be on Monday, the 9th of May. It's going to be a fun day. We're going to be live streaming it. We're going to hear basically more insight into how the company is doing and what type of future guidance that they're going to issue to us and where they expect to see the business and the company go over the next couple of quarters. But I think sometimes we hype up earnings too much and we don't really see the results that we want to. And even directly coming from Adam Aron himself in the last earnings call, with that, don't hold our feet to the fire too much for Q1, but boy, you are going to like Q2 through Q3 and Q4. So we are going to be receiving Q1 2022 earnings on Monday. So I wouldn't get necessarily all that hyped up about Q1 unless he's kind of trying to sandbag us here by kind of keeping our expectations low and then really coming through with something big. But again, Q2, Q3, and Q4, we're going to have the summer movies. We are going to have a lot of good things coming in that time period that could be reflected in their earnings and some even more bigger announcements that Adam Aron has in store for us. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys in the next one.